All right. Hello and welcome. For everyone joining us on Zoom, welcome or welcome back to the NNP Symposium. For everyone in Schaumburg, welcome to Central States and also the NNP Symposium. So all of the presentations in this room are being live streamed as well as shown live, of course, as part of the NNP Symposium, which is an online educational conference we've been running since 2020. It's fully sponsored by the Eric P. Newman Numismatic Education Society. And this year we got to partner with Central States as well to bring an in-person component. So I believe that is all of my business. For this session, we are going to be hearing from Jeff Pritchard, who is a lifelong numismatist and retired financial planner. He has written books. I left my notes with the title of the book over here. His most recent one is 529 College Savings Plans for Grandparents. He's also an ANA, Liberty City Collectors Club, and Pacific Coast Numismatic Society member. So today he will be talking to us about estate and tax strategies for your coins.
Well, thank you, Leanna. I don't know if any of you, maybe many of you have probably heard the story, the crotchety old coin collector. And he was getting on in years and he really didn't have a lot of time left. But he told his wife that he loved his collection so much that he wanted to take it with him, so he could enjoy it up in heaven. And so he told his wife he wanted help moving it up to the attic so that then when he passed away, he could just take the collection with him. Well, a couple of weeks later, they moved it up. A couple of weeks later, he passed away. And a few days after that, she went up to the attic, and sure enough, all the coins were still there. She shook her head and said, "I knew we should have put it in the basement." Look, I'm not going to give up my day job. The purpose of this is that in the life of every collector, there comes a time after maybe decades of collecting, putting together an exceptional collection, which may end up being substantial, very, very valuable. There comes that time of what now? How am I going to thoughtfully dispose of this collection that I've taken decades to build and I've lovingly taken care of? And so that's what this is this evening about, is to provide some detailed concepts that you can consider in the regards of how to thoughtfully dispose of your collection. Now, the first thing, of course, are the caveats that I'm going to have a lot of tax information, but please don't interpret this as tax advice. Everybody's personal financial situation is unique. Everybody's family situation is unique. And then you layer on top of that all the differences in the various state rules and regulations and tax rates. And so if you've got a significant collection, I'm providing concepts, but you want to work with an estate planner or a tax advisor if you really are going to get into the meat of this. And again, I'm going to provide concepts, not true tax advice. One of the nice things, however, about this is that all the rules and regulations I'm going to cover apply to almost any collectible, anything from coins to sports memorabilia to fine art. So that's one thing to kind of keep in mind. Now, I thought one of the ways to kind of catch your attention, it's been a long day, is to start with the absolute worst things that can happen to your collections. The nightmares, the things that keep you up at night, the worst case scenarios. And I actually call these numismatic nightmares. And I've got 6 of them. There's probably more. But the first one is that your heirs only get melt value for your coins. They take them to the wrong place. They're misinformed. And so that collection of yours, they end up selling it for bullion value. The second numismatic nightmare, which is even worse, if you're a collector of currency, wash-in quarters, you name it, somebody in the family gets their hands on it and they spend it. They don't even get bullion value for these things, okay? It's pretty bad. The third is that your collection becomes a future hoard. And I don't mean that in a good way. You've done such a great job of hiding that collection so it's safe that you get hit by a bus tomorrow and nobody knows where the coins are. The fourth nightmare and this is related to the first and second, is that the entirely wrong person gets their hands on your collection after you're gone. And, in reality, this can happen because of divorce, it can happen because of remarriage. Those are things a little out of your control. And the problem is it can wind up in the hands of someone who has no regard for the historical value or the historical element of your collection and doesn't have the patience to dispose of it properly. And I have to say, the more either esoteric or out of the mainstream your collection is, think colonials, think heirs, think tokens and medals, the higher the likelihood is that someone may end up with all or part of your collection or in front of someone who simply doesn't know what they're looking at. The fifth nightmare is you get that unwanted and unexpected letter from the IRS. Now, I know that a lot of smaller transactions, we inadvertently forget to report those gains we might have. But if you're selling a whole collection or significant pieces, typically you are going to need to report that. We all know the IRS is getting more funding. They're getting more auditors. They're getting access to more technology that with approval, they can be more and more invasive as far as your transactions. So it's really important for us and our heirs to be mindful of this, of the proper reporting and whatnot when you're selling a significant collection. And the last nightmare, and this is one I take pretty seriously, is the whole issue of privacy. Home invasions have gotten to where they're no laughing matter. People are often killed in these. And, I've got a hypothetical headline up there that if this woman saw that in her local newspaper, she'd probably be horrified. Because that kind of headline or publicity puts in a bullseye on her back. And so a lot of the things I'm going to talk about, we're going to be mindful of privacy to make sure that your best intentions don't end up being public information. So I thought a good way to approach this is to really go through the 5 ways that you can dispose of your collection and then go through them in a little detail, the pros and cons, some of the nuances, some of the tax issues, but how you can work with these to try to avoid some of these nightmares, as I call them. The first is to sell coins during your lifetime. The second is to gift them or give them away during your lifetime. The third is to give them away, but doing it after you're gone, so through your estate. It's pretty common. The fourth is to give all or a portion of your coins to a charitable organization during your lifetime. And then the fifth is to do that, to give all or a portion of your coins to a charitable organization after you're gone. So I know some of this is remedial for some of you, but so we'll first talk about selling the coins during your lifetime. The first advantage right off the bat is you relieve your family members from having to do that. And if they're not familiar with numismatics, that can really create stress for them. The biggest advantage of this, of course, is that you know the areas you collect as well as anyone. And so you're going to know the best dealers to work with. You're going to know the most appropriate auction house. In essence, you're going to probably get a much better price than your heirs will be able to get if you sell those. And of course, you may want or need the money that's currently tied up in your collection to use that before you pass away. The negative of that approach, or this approach, is that you may have capital gains embedded in those coins. So when you sell them, you may have a taxable event. Yes, some coins do go up in value. Okay, so the ways to sell coins, and there's 3. The first is to work with a coin dealer. And the advantage of that, of course, you're going to get fast payment. There's dealers today that can absorb all the very largest collections. And as you know, there's a lot of dealers that specialize in whatever you might be specializing in. So that's really good. And a lot of dealers now will take material on consignment. So you can get closer to a retail price, which is really a good thing. The negative to working directly with a dealer is that you are going to tend to get more of a wholesale price. Dealers are incredibly important to the coin market. We want them to make a living so they stay in business. So again, you're probably going to get more of a wholesale price in that manner. The other element, of course, they may not want everything you've got. They may cherry pick. They may want either the very best or maybe just the things they really focus on. So that can be kind of a shortcoming. And then if you don't have certain dealers in mind that you've worked with over the years or that you really trust, it can be kind of a logistical burden to get bids from multiple dealers. You see people going around the show today with their briefcases, and most dealers don't want to spend a lot of time going through a really extensive collection. So that can be a shortcoming as well, is just getting bids from multiple dealers. The second method, and I should say, when I was talking about all the various means of disposing of your collection, it's not an all or none proposition. You can obviously mix and match. You can use all of those 5 methodologies. So I'm sorry, didn't mention that. The second way of selling the collection during your lifetime, auction companies, from our time standpoint, that's going to be the most efficient. And the other thing, of course, is the auction companies have a direct vested interest in getting the highest possible price for your coins because they're getting a percent. And so the idea there is they're going to be marketing them to the people they think are going to pay the highest possible price for what you've got. And that's a good thing, obviously. The other thing, I don't know how many of you sold through auctions, but the terms are negotiable as seller's fees. The mainstream auction companies charge anything from 0% to 10%, depending on their business model. But even the 10% is negotiable. If Stacks or Heritage, which starts at 10, if you've got something they want, that's very negotiable. And I've been told, I haven't been able to do this, but I've been told that, if your collection is really phenomenal and they really want it, you can squeak out some of the buyer's fee. So it just depends upon the material you've got. And the larger companies like a Heritage or Stacks will provide advances against what they expect your collection to sell for. Those are financed, but advances are available. So the negatives to that, kind of the flip side of that, is the time element. From the time you consign something to an auction company, the time you get a check, you're looking at 2 to 3 months. Now, if you've got something unique that they want to aggregate with other similar coins, like so you've got a great collection of pattern coins, but they want to wait until there's a larger collection of patterns to group yours with, that can take even longer. It could be looking at 5 to 6 months. So that there is that time element. The fact that your coins must qualify for the auction is less and less of a problem now. The internet has really democratized, I think that's the right word, the whole auction process. So yes, you have companies like Stacks and Heritage that tend to focus on more premium items, but you got companies like Great Collections that are set up so they can really accept almost anything. So there's a wide variability of the auction companies available for you to use. And then, of course, the third method of selling the coins during your lifetime is to sell them yourself, retail. It's eBay, Etsy, whatnot. There's a lot of online platforms. You can take them around at a show like this. And the advantage here, of course, is you're going to get retail, or sometimes on eBay above retail. So there's that. And the other thing is some of these platforms online are really good for lower, more moderate priced or lower priced coins. The one negative is they may not sell real fast. They can sit there for quite a while. And you may not want to go through all the administrative and logistical hassle of setting up the site and photographing the coins. If you're already doing that, a few of you are nodding, that's great. Or if you want to make that your new hobby, liquidating your coins, that's great too. But if you're not really interested in doing that, that's one of the negatives of this approach, is that there is a lot, there's some administrative work involved. Okay, now I mentioned taxes. This is everybody's favorite topic. But there are tax implications if you bought the coins a long time ago. Maybe they're bullion related and they've done well. Basically, if you've held the coins less than 12 months, any reportable gains are taxed as ordinary income. If you've held them longer than 12 months, they're taxed as long-term capital gains. Now, in theory, the maximum capital gains rate, federal capital gains rate, is 28%. But depending on your income, you can pay lower, 10 or 15%, but you can also pay higher. And you can pay higher if your income is above a certain level, You get the pleasure of paying the Medicare excise tax, which is 3.8%. And you may reside in a state that has its own capital gains tax. We're in Illinois, so I thought I'd put up Illinois has their own capital gains tax rate of about 5%. California is as high as 13%. So the problem is, depending upon your income, you can end up paying upwards of like 40% capital gains tax on the sale of a major collection. So like I say, it's everybody's favorite topic. So a question comes up, well, what about losses? Some of us have coins that actually haven't appreciated. It's hard to believe. If the IRS that's humor. If the IRS classifies you as a collector, you cannot deduct losses. You can't net them against gains. You can't carry them forward. No losses. But if the IRS classifies you as an investor, you can deduct losses. The problem is the IRS's default is that if you own collectibles, by definition, you are a collector. And the key element for them is basically, do you have the coins primarily for enjoyment? That makes you a collector. Or do you have the coins primarily for profit? That makes you an investor. If you think you are an investor, you should be doing the things that can demonstrate that, if you ever had to demonstrate that or prove that. And that means basically operating in a very business-like function. Keep detailed records, store them properly, possibly have them insured, have investment reasons of why you buy the coins, and occasionally sell. Even Warren Buffett occasionally sells investments. And so if you never sell, and then at the very end, you're saying, I'm an investor, that's kind of a tough sell to the IRS. Okay. Couple very quick asides. If you bought items decades ago and you have no idea what the cost is, but you do want to, report this to the IRS, the IRS, I'm told, will accept old Red Book prices, old auction catalog prices, so you can come up with a reasonable estimate of what the cost would have been, and they'll accept that. Okay, the second area is to gift the coins, to give them to friends or family during your lifetime. And that's one of the advantages of that, of course, is that you know who's going to get them because you're figuratively handing the coins to them. The other thing is that, and this isn't financial, but if you give your collection to kids or grandkids, it gives you an opportunity to mentor them, to coach them about this collection. And it gives you an opportunity to receive their appreciation for this gift. And again, that's not financial, but it can be very meaningful. You remove them from your taxable estate, and I'll get a little more detail on that. That's not something that most of us have to worry about, but it is. It does remove them. If you are at that level where you're worried about gift taxes, there's the annual gift tax exemption of $17,000, and if you have a spouse, that totals $34,000 that you can give away each year to as many people as you want, with absolutely no gift tax ramifications. Again, that's a pretty high bar. Most of us don't have to worry about. And lastly, when you give something to someone, that's a private transaction. Nobody has to know how much your collection's worth or who it's going to. And that can be very beneficial. The negative in that approach is that when you give something to someone, your cost basis becomes their cost basis. It's called the cost basis carrying over. So even if you bought something in the late 60s, some of you look like you could have, if you bought something in the late 60s at an incredibly low price and you give it to your grandkids, now that's their cost basis, even though you got it, ages ago. The dominion and control issue is if you give, according to the IRS, if you make a gift, for it to be a true completed gift, you can't still control it. You can't still hold on to it. There can't be any strings attached. You really have to give it away. And again, I mentioned there's the potential gift tax issue, but I'll touch upon that in a little more detail. This is probably one of the most common ways for people to dispose of their collections. That's to give it away to family or friends through their estate. And I have a big star up here because the overriding advantage is the step up in cost basis. So even if you were wise enough to buy a lot of, I don't know, high relief St. Gaudens back in 1971, and they're now worth 10 times. When your heirs get them after your estate's settled, that step up in basis is now what the coins were worth as of your date of death, the fair market value at your date of death. So if they're going to sell them in the near term, it's unlikely they're going to have any tax implications. That's a huge advantage and applies, of course, to all assets. Again, you can specify the recipient, you can provide detailed written instructions. So there's a lot of good that comes out of that. There is a potential privacy issue if you're passing things along in your will, and I'll explain that. But your heirs may also get a step down in basis if you've got, say you bought a lot of really nice commemoratives back in the late 80s. Those have probably declined a bit, declined a lot, but they'll get a step down in basis. Basically, whatever assets you're passing along to your heirs in your estate, the value is reset based on the market value of your date of death. The other thing, again, this isn't financial, but it's tough to mentor somebody once you're gone. And so, or to receive their appreciation for your generosity. So again, that's not financial, but it's meaningful. So it's something to consider. Now there's the potential estate tax and inheritance tax. Let me touch upon that, because that really isn't something that most of us have to worry about. In 2023, the level at which your estate has to exceed to be subject to federal taxation is 12.9 million. Okay, that's a pretty high bar. Combining that with your spouse is 25.8 million. Okay, I don't know about you guys, but I don't qualify. However, there's a couple caveats. At the end of 2025, that high bar is going to roll back to around 6 million. Now it's still a high bar, but it is much lower. The other thing that's a lot of people forget is a lot of states have their own estate tax, okay? And they're all much lower than the federal level. I live in the state of Washington. State of Washington has an estate tax that starts at 2.2 million. Massachusetts and Oregon have an estate tax that starts at 1 million. Okay, I mean, above that, you're paying tax. And in the state of Washington, for example, the tax is anywhere from 10 to 20%. But you think of what's happened to the price of real estate over the last 10 years, the price of securities. Having a level of 1 million is a lot of people fall into that and they forget about it because they're always thinking about just the federal tax issues. Just very quickly, just kind of an FYI, the difference between inheritance tax and estate tax. Estate tax is taxed on your overall estate, all the assets, and typically paid before it's distributed to your heirs. And inheritance tax is paid by the individual who received the assets. And if it's above a certain level, they have to pay tax to the state. So estate tax paid by the estate, inheritance tax paid by the individual. Anybody here live in Maryland? They have both an inheritance tax and a federal the state tax as well. Anyway, so some recommendations if you're going to go this route, distributing your coins through your estate. First off, keep a very detailed inventory and include as much information in that as possible. That is going to do your heirs a huge favor if they're going to sell them, if they're going to insure them, whatever the case may be, and keep multiple copies of your inventory. The second thing is keep very detailed written instructions for them. Okay, now obviously the location, unless you do want your stuff to end up being a hoard. The other is obviously if you've been working with a dealer or two, or have specific recommendations for them to use a specific auction company, include that. Give them good instructions. Lastly, don't forget real basic stuff that none of us would ever think you'd need to say, like, you don't want to give them to your son and then he's going, well, dad gave me this great instructions on the auction company to use. They're all these funny plastic containers. I'll bet if I break them out and polish them, I can get a lot more. Okay, that's not what you want to have happen. So include real rudimentary instructions about the care and maintenance of the coins, because again, if it's going to somebody who really isn't familiar with numismatics, they could really make a big mistake. The other thing is obviously update the instructions and the inventory periodically, maybe annually. And this element, it's human nature for, I think, most of us, when we think about our coins, the value, kind of a tendency to think retail value. We like to think, it's good to feel that they're worth as much as possible. But if you're sitting down, kind of dividing up your estate, keep in mind that your heirs aren't probably going to get retail for those coins. They're going to get wholesale. And I mentioned that. So if you're dividing up assets and you want to be equitable among kids or grandkids, just remember that if those coins are eventually sold, they're going to be looking at a wholesale price. You give somebody real estate and, the market's kind of the market, but the coin market, big difference, obviously, between wholesale and retail. Just something to keep in mind. Okay, now I mentioned the privacy issue. This is the kind of thing that if it was in your will, your daughter might not be too happy with you because, you've even given her maiden name. They're going to have no problem tracking her down. When a will goes through probate, which is kind of the administrative legal proceeding of settling the estate, your will becomes a public document. People can literally go online and read your will. Now, the caveat is if your estate's below a certain level, and it varies by state, it doesn't have to go through probate. So, for example, in California, if it's below $150,000, it doesn't have to go through probate. But if it does, again, your will is a public document. So the solution, if you still want to pass things on through your estate, is to pass things outside of the will so it doesn't go through probate. And there's two pretty good ways to do this. One is called a personal property memorandum. And this is just a separate document. It doesn't have to be done by an attorney. However, I would recommend everyone at least initiate that document with an attorney's help. Doesn't have to be done with an attorney. Doesn't even have to be notarized or witnessed. You just type up or handwrite a list of any of your personal property and sign it and date it. Now, this is for tangible, non-title property. So obviously real estate wouldn't work because it's tangible, but there's a title. But it can work for your household items, rare coins, fine art, again, tangible, non-title property. There's 30 states that accept this. And I have a list up here in a second. You would want to reference this in your will that you've got this other document. You want detailed descriptions of this. It would be smart to store it with copies of your will. Wouldn't hurt to have more than one copy of your will, incidentally, if and have a will. But it only has to be handwritten, signed. Again, not witnessed, not notarized. And one of the advantages, if you initially had set this up with an attorney, unlike your will, when you usually have to involve an attorney to change the will. With a document like this, you can change it as much as you want, and you don't have to get an attorney involved. Although if your collection is, really significant, you probably always ought to have an attorney involved. That's just my recommendation. These are the 30 states that accept personal property memorandums. So there's another option. If you don't live in one of these 30 states, and the privacy is a big issue for you. And this is just, again, when you're doing this through your estate, is to set up a living trust, okay? A revocable living trust. Now, functionally, this is really straightforward. Trusts always sound complicated. This is straightforward. The happy collector sets up a trust, okay? And you need an attorney to do this. It's a modest cost, and then transfers the ownership of the coins into the trust. Then upon that collector's demise, the coins are distributed to the heirs based on the collector's instructions. Now, if you make this revocable, you can change it at any time, you can cancel it, you're not locked into anything. When it's revocable, all the tax issues are the same as if it was in your state. It's still in your taxable estate if you're at that level and you worry about it. And your heirs still get a step up in the cost basis. The only reason you would do this and to make it revocable is if the privacy is a big deal. And because the trust is a separate entity, it passes outside the will, it doesn't go through probate. And there are a number of people already doing this. If you go into any of the registry sets at NGC or PCGS, and you dig down in some of the really high up ones, you see a lot of those are named in a trust. So people are doing this. And again, if it's revocable, you can change it at any time. The fourth element is to, during your lifetime, contribute all or a portion of your coins to a charitable organization. Now, there's a lot of tax advantages I'll touch upon, but the real reason you want to do this is to support an organization you care about. You care about their mission and you want to support them. I mean, otherwise there's no real big point to do this. The tax advantages, though, are you're going to totally eliminate any capital gains that are embedded in the collection. You're going to remove the coins from your taxable estate if that's a worry, or you're worried about it in the future. And you may get if you're itemizing your deductions, you could get a charitable deduction for your income taxes. And the other element, as far as why you would want to do this during your lifetime instead of when you're gone, most people enjoy seeing the impact of their charitable gift. And you can't do that once you're gone. You make a gift to an organization and you can see how they're using the funds. And that, again, can be gratifying. The caveat to all that is, do they want your coins? Will they accept your coins? And I mention that because most charitable organizations, I'm not talking about the ANA or the ANS or something, but most charitable organizations, your church, your alma mater, the local YMCA, they have gift acceptance policies. And usually that's around avoiding taking on something like real estate. And then 2 months later, they're finding out there's a toxic waste dump on the back. Okay. With coins, their concern is going to be, for most organizations, we know nothing about coins. We don't even know if the appraisal is accurate. Is this going to eat up a lot of staff time to figure out what to do? Are we going to have to hire third parties to help with this? If you are thinking about this and you're charitably inclined, there's a real good solution. This is a win-win solution. You donate the coins, and then you kind of put on your volunteer hat and help them liquidate the coins in the most efficient manner possible. That's going to help the organization, and there's no reason you can't do that. So that's a solution, because their concern is taking what they consider weird assets and having it eat up a lot of their staff time in doing anything with them. I don't know if you guys can see that example, but if you're thinking of making a major gift to a charitable organization and you've got cash, you're going to sell the coins and use that cash, or the option of donating coins that have appreciated, it's extremely advantageous to donate the appreciated coins, because you or I are going to pay the capital gains tax. Where in this example, the example I have up here that you guys are squinting, so I can't read it. But if you've got a collector, he's going to net $250,000, or he's going to net $250,000 when they sell, but they bought them and the price was $130,000. They're going to pay about $33,600 just in the federal capital gains tax. So if they're going to donate that same amount, they're only going to be able to donate $216,000 to the charity. Whereas if they donated the coins, the charity pays no capital gains tax. The charity would net the full $250,000. Okay. So this isn't work for everybody, and this is obviously a significant gift, but again, something to consider. Now, the question that comes up if you're thinking of contributing all or a portion of your coins to a charity, how much am I going to be able to deduct? Can I deduct the cost basis or the fair market value? And it depends. So if you've held the coins longer than 12 months, and the coins can somehow be tied in with the organization's charitable function, then you can deduct the fair market value. Now, charitable function, if you're donating them to the ANA or the American Numismatic Society or the Tokens and Metal Society, obviously that ties in with their charitable function. If you can donate them to a museum that might be able to display them and not sell them for 3 years, or even maybe a university that can use them in their history classes or art classes, if you can make a tie-in with that organization's charitable function, you can deduct the fair market value. But if it's going to your church, your alma mater, your local YMCA, then you're going to only be able to deduct cost basis on those coins, because there's no relationship to their charitable function. I don't want to go into a lot of detail. If you've got coins that are valued above $5,000, you need a qualified appraisal on those coins when you're going to donate them. the key on all this, and there's a form called 8283 that you and the organization and the qualified appraisal has to sign. Here's the thing. If you are seriously thinking about making a major gift of numismatics to an organization, sit down with their development director, sit down with somebody from their fundraising staff. They will help you with all the administrative stuff. They'll make it as easy as possible because they would like your donation. They can't give you specific tax advice, obviously, but they will help you with all the administrative stuff. So it's done properly. You don't have to figure this out. You're not on your own if you want to do something like this. I'm not going to go into this detail. The other element, and I'll touch upon quickly, this gets a little bit convoluted, but if you make a major gift of all or a portion of your coins to a charitable organization, you may end up with a charitable deduction that's too large for your income to absorb in 1 year. You can carry that charitable deduction forward. You can use it for up to 5 years. So take a little bit of it, each year. The other thing is, if you're thinking about doing this, if you're sitting down with an estate planner or a tax advisor, it may make sense to accelerate some of your income in those 5 years. And if you're retired, that may mean taking a larger distribution from your 401k or your IRA than you normally would. You accelerate some of the income to absorb that large deduction. Okay. Very quickly, I'm almost done. If you want to do that fifth element and donate coins to a charitable organization after you're gone, you remove it from your taxable estate. You still are supporting the organizations that you care about or the mission you care about. You have some tax advantage, but just my personal feeling is it's a lot more gratifying if you can to contribute during your lifetime. Because again, you can see the impact of your gift and there are more tax advantages during your lifetime. So if you are charitably inclined, you're thinking of doing that with all or part of your collection, I would say seriously consider doing it while you're still up and around. It's more gratifying. I touched upon some advanced strategies. I won't go into these in detail of using trusts. There's a lot of things you can do if you're going to sell, to where you sell in increments or you stagger the years. There's a lot of things you can do because you want to be as tax efficient. Part of this is doing what's right for your family, but the other is to be as tax efficient as possible. Okay, I will conclude with a couple quick points. And that is, if you only remember one thing this evening, and since all of you are thinking about dinner, I'm only expecting to remember a couple things, and that is prepare today. We've all got or had friends, family members, acquaintances who have passed away unexpected, long before their time. You may think, oh, I got this all figured out. I'm giving these coins to my grandkids. But if you get hit by that bus tomorrow, is that in place? The second thing is to simplify your holdings. If you're like me and you've collected for decades, you've probably got a lot of stuff that isn't really germane to your key holdings. Simplify those holdings. It's a lot easier to sell one $10,000 coin than 10,000 $1 coins. So benefit for your heirs, simplify your holdings as you get older. As I mentioned before, get those written instructions, the inventory, have this stuff written down so that your heirs don't inadvertently do some of those numismatic nightmares I referenced early on. And if you can do these things, then you really are going to prove yourself being, a very good steward. Most importantly for your family, but also for the coins. I think we all know that in the long run, we're sort of just the caretakers for those coins. So with that, I will open up if you have any questions or comments. I step aside now.
Turn off the screen share there. Okay, so we already have a question in Zoom, so I'm going to start with that one. And then we'll open it up to the room and switch between the two. If you are watching online, there's a Q&A button at the bottom of your screen. Just click on that and you can send in questions. We will read all of them anonymously, so no need to worry about that. And just a reminder, for any questions asked within the room, I will be repeating them so we are sure that everyone at home can hear. So already in here we have, do you think the auction houses will be required to report individual sales to the IRS?
Unlikely. I think what's more likely, I think if any of you follow, proposed legislation, there was proposed legislation at one point about a year ago that your bank had to report cumulative transactions above $600. I mean, that's like my kids have. I mean, that's ridiculous. That's what there's more of a likelihood that because the banks are they're processing all the financial stuff. That's more likely. Is it there'll be some responsibility or requirement that falls onto the bank. Hopefully not the auction houses.
All right. Do we have any questions in the room? Yes.
The list of 30 states. Can you get a copy or see it again?
Oh yeah. He asked to see the list of 30 states again. I will work on pulling that up. And someone in the commentary would like to back up a slide. So we're just going to pull the PowerPoint back up. Okay, then you can navigate back to the list of states. And then for the person on Zoom, we will go back to that second to last slide once we've seen this one for a few minutes. Oh, sorry.
We turned off our screen.
I did. I will. There we go.
You didn't tell me I had to be technically.
There
There it is. Again, if you're going to use this personal property memorandum, I mean, depending on how, the value or collection, at the very least, it would make sense to get an attorney involved in establishing it. If you then wanted to, as you amend it, as things change or whatnot, that's one thing. But that way, you're getting it set up properly.
Okay.
You should have practiced this tag team.
Alrighty. We'll leave this one up for one more question, and then we'll go to the one that was requested on Zoom. In the meantime, we had a break-in at our home and lost 65,000 in coins. Can I report a loss to the IRS? Back up.
I don't know. I'm not sure, because I think you can report, you probably can. You can report general losses, but that's one I would call your tax preparer on. I'm actually not sure about that. Ideally, if you have insurance, because obviously homeowners insurance covers like $200 or something, it's very inadequate. So I think most people would recommend having insurance, but I don't know on the IRS loss issue.
All right. And then someone online requested the second to last slide. That was it. Okay. We'll leave it there for a moment. Okay, that's it on here. Do we have any other questions in the room? Yes.
You mentioned the reduction in 2025 down to 6 million for the federal exclusion. Is that for individual and double that for couples? Or
Yeah, and it'll probably end up being 6 and change. It's based on how much inflation we have between now and then. So yeah, I don't know if any of you sold coins before 2017, where you could do the like kind exchange. That doesn't exist anymore either. A number of things, but that falls back because that was one of the compromises to get that legislation passed.
And for those on Zoom, that question was about the reduction to 6 million in 2025. Okay, we don't have anything else on Zoom, so if you are online, go ahead and send those questions in. Otherwise, do we have anything else here in the room?
Can we get a copy of the entire presentation?
Oh, yeah.
How do we go about it?
Said, can we get a copy of the entire presentation, and how do we go about that? I'll share my commentary on that, and if you have anything to add, you're welcome to. If you would like just like the PowerPoint file, as long as Jeff is okay with it, you can just send in go to the symposium website, the contact us page, and just send us a message letting us know what you're looking for, and then we can forward that to you. Otherwise, the entire presentation is being recorded and it will be uploaded to the NNP about 2 weeks from Saturday. So if you would like to get an email notification when that is up, you can register for the symposium itself. It's entirely free, takes about 2 minutes, and there is a link or a QR code on both of the posters about that. So
When will that be?
that'll be up about 2 weeks from the end of the symposium, which is Saturday. So early May. I can't do that math that fast. Okay, there's still nothing else in Zoom. So I think there was another hand in the room. Did I imagine their hand in the room? Nope. Okay. Okay, then I think that is going to be it. If you have any last minute questions, get them in now. Otherwise, that will wrap us up for today. Thank you for everyone who came here in Schaumburg. We've had a great crowd throughout the day for an in-person coin show. We've had a lot of people tuning in online as well. So thank you everyone for participating. We'll be back bright and early, depending on your time zone, tomorrow at 10 a.m. Central with the Liberty City Collectors Club meeting. That is open to everyone, and there will be a presentation involved in it as well. So even if you're not a member of the club, I encourage you to tune in. I will have a presentation by Len Augsburger as part of that. So, all right, I have nothing new here. Last chance for questions in the room. All right, then that is it. Thank you everyone for joining us. See you tomorrow.